Ladies and gentlemen, welcome. Today is Friday, December 12th, 2025. My name is Alex Dworkin and I'm a managing partner at 4D Capital. We specialize in a very unique mathematical approach to the stock market where we analyze the market and individual stocks in multidimensional space. And when we do, essentially perfect order emerges. On top of that, we've developed a number of very powerful timing indicators, and when we combine both of those factors, we can very often predict what the overall stock market or individual stocks will do going forward in both price and time. And we can typically do it on multiple time frames, whether it's long-term, short-term, doesn't really matter. I personally believe our work is nearly identical to what Jim Simmons was able to accomplish at Renaissance Technologies. We're going to be looking at Google today, Alphabet, Google. I still call them Google. Unfortunately for the longs, right now they're doing wonderful, but going forward for the longs, I don't have good news. Google recently popped up as one of our fast movers, and it's going to be a fast move to the downside. So we'll talk about that today. Before I do, let me just very quickly mention that our firm's primary goal is to essentially identify stocks that will 2x, 5x, 10x going forward. And of course, everybody's looking for the same thing, right? Everybody's looking for that next, Bitcoin, Microsoft, Apple, Tesla, and so forth. Well, we have a special weapon in our arsenal that allows us to identify just such stocks. And that is our powerful mathematical software, or I should say a software that is built on top of our mathematical work that essentially allows us, for example, scan their entire S&P 500, identify stocks that will put in important bottoms going forward. We can do tops as well, but we typically concentrate on bottoms because it is from those locations that we can 2x, 5x, 10x going forward. It's very difficult to make money on the short side, as you know. So we can scan the entire S&P 500, we can identify where those stocks will bottom, for example, and then we can calculate how far and in advance, how far or how much higher, I should say, they will go going forward and how long it will take. And of course, we can pick out only the opportunities that will appreciate the most within the shortest period of time. So that's our competitive advantage, so to speak. So as I mentioned, Google popped up as one of our fast movers. Just let me very quickly explain to you what a fast mover is, at least according to our work. What you're looking at is crude light, oil futures. And we actually did crude light analysis just a few days ago, so please go into our history and you can see that video. Very interesting analysis in terms of what the oil is going to do going forward. But what you see here on the bottom is our cycle composites. I'm not going to go into detail about what they are. I talk about it pretty much in every video, so you can find that information. But basically what we found in our research throughout the years is that when there's a short period of time between, for example, a major cycle top and a major cycle bottom, as is the case here, or a major cycle bottom and a major cycle top. In this case, it's a mid-cycles, but I just want to drive the point home. So point is, when there's a short period of time between a major cycle top and major cycle bottom, or vice versa, bottom to top, it is during those periods of time when stocks, individual stocks, overall market doesn't really matter. Typically, not always, not 100%, but typically, I would say 60 to 75% of the time, move with great violence, either to the downside or to the upside. Okay, so they increase substantially, as is the case here, as you can see, or they crash. So crashes typically happen during that, well, as a matter of fact, they always happen during that period of time between a major cycle top and major cycle bottom. So those what our fast movers are, and our software can identify these cycle tops and cycle bottoms, and then we of course know that there's a possibility of a fast move, and then we use our mathematical work to confirm whether or not there's going to be a fast move during that period of time. And that's where Google comes into play. Okay, I apologize for not using Alphabet, but I just like saying Google better. Old habit, so to speak. Okay, so this is Google. As you know, the stock has appreciated quite significantly since just a couple of weeks, a couple of months ago, and that has to do with AI and supposed competitive advantage in AI and all of the good stuff. But as you know, we're most likely in not only everything bubble, but AI being the primary, the spearhead of this current bubble. Okay, so what are we looking at? So I already described these cycle composites. Basically, it's a very simplistic representation of a very complex mathematical concept. We scan the chart back in multidimensional space, and then we project it into the future. And the bottom composites are responsible for the bottoms, top composites responsible for the tops. Typically, there are multiples of them running at any given time. I use Dow Jones as an example always, and Dow Jones has, for example, 2 bottom composites and 2 upper composites running at the same time. But if you know that and you know how to put them together, you can essentially replicate exactly what you see in the 2-dimensional time and price chart. So what I'm saying is you can replicate with a very close approximation in both time and price what you see on the stock chart. Okay, so with that in mind, basically what the chart is telling us, or what our cycle composites are telling us, is that Google is moving into a major cycle top, which is scheduled for here. As you can see, let me move myself here a little bit so you can see in the left-hand corner, you will see a date. So 24th January of 2026. That's when our cycle composites anticipate a top. Okay, but as I always say, these cycle composites typically come with a certain margin of error associated with this or with it. In this particular case, the cycle is pretty long, so it's approximately plus or minus 2 months. So we can say we are already within the margin of error associated with this particular top. Okay, then once the top is in and confirmed, and I'll talk about the prices here in a second. But once the top is confirmed, the stock is going to decrease into this major cycle top scheduled for the 4th quarter of 2026. If you've been following our videos, you know that 4th quarter of 2026 keeps coming up again and again and again, and that's when we anticipate a significant bottom in the overall stock market. Okay, so with that in mind, we anticipate basically a significant move down of 50%, approximately 50%, into around $150 a share range for Google. I'll show you in a second, between these 2 dates. So between now, let's say, and 4th quarter of 2026. So the question becomes, what about the prices? So I'll give you both good news and I'll give you bad news. Okay, so we have 2 ways we do, let me minimize this, 2 ways we do calculations, 3-dimensional calculations. This is one of them. Okay, so I know it doesn't make any sense to you, it makes perfect sense to you, I'm sorry, to us, so I'm just going to explain what you're looking at. So one of them, which is not present here, shows, and actually I'll show it on a different chart, shows that this top that we just had at $328 a share for Google was indeed the actual top. Okay, these calculations, they're a little bit different, but we cannot, typically we can reconcile them, but not in this case. These calculations suggest that Google will hit into this area of, let's say, $360 plus or minus $10. This particular range is more important. It ends up at 364. So let's say 360 plus or minus $10 a share. So we'll hit into this range before the top is in and before it begins to decline. We cannot ascertain at this time which one it is, whether the top is in at 328 or it's still going to go into 360 plus or minus $10, because the time variable is a little bit not as precise as we would like it to be, not as precise as it typically is for most of the stocks that we follow, but in this particular case for Google it is a little bit more variable than we would like. So we are left with these 2 targets. The top is already in, 328 or $360 plus or minus $10 going forward. So once the top is in, let me show you something very cool. So this is what I was talking about, why our software is so powerful and nobody else has the ability that we have, because we can calculate in 3-dimensional space not only where the top is going to be going forward, but after the top is put in place, exactly where the bottom is going to be. So we know that the bottom is going to be in 4th quarter of 2026, which is approximately right here, right? And I know, once again, this doesn't make any sense to us, but we can eliminate most of them. And when we do, essentially what ends up happening is our calculations point into this particular area. Let's say a little bit lower than $150 a share for Google price when this bottom that our calculations suggest is coming does indeed arrive. We can be more specific once the top, in this particular case, once the top is confirmed. So once we confirm either 328 or 360, then we can be a little bit more precise in terms of exactly where the bottom is going to be. But for our purposes, at this stage, me saying that it's going to be at approximately, let's say, a little bit lower than $150 a share is a very good target to follow for now. Okay. So let me show you the other chart, so the title of this video is going to be something similar to, Google is about to pull an Oracle, right? And if you go back in history and you look at our Oracle videos, you'll see that we actually called this stop. We came out right here and we said that Oracle hit right into our mathematical calculations, and it's most likely going to decline now, and decline quite substantially. And as you can see, that is exactly what has been happening to the stock. So the title of this video is going to be something similar, that Google is about to pull an Oracle, right? So let me show you the chart. So this red line represents our three-dimensional calculations. They're just a little bit different from the other ones. That's I'm sorry. That is the discrepancy I was talking about a little bit earlier. So one of our calculations suggests that the top is in, and the other one suggests that we're going to hit, $360 a share approximately here before Google rolls over and begins to decline. So there are a couple of ways to play this. If you, on the technical side, you want to see a pullback and then a bounce, and if the bounce doesn't go about $328 a share, then and begins to fall or fail again, then you can essentially trigger a technical entry. Or you can wait, and if we break above 328, I would say if we go like $335 a share, then rest assured we're going to hit that $360 share, and then you can take a short position there, assuming that is something you want to do, or you can actually hedge if you currently have a long position in the stock. So that's it for Google. That's it for this week and today. Thank you very much for your time. Just a quick mention that our geopolitical date of December 13th strikes tomorrow. There's a plus or minus a 2-week time window associated with that, a particular time turning point. The stock market might be reacting. There's some incomplete business on the NASDAQ in particular, but let's see what happens over the weekend. Hopefully nothing happens, but this war cycle is incredibly powerful, and it does indicate that something terrible is about to happen. So with that in mind, have a wonderful weekend, and we'll be back with another video tomorrow, or not tomorrow, on Monday. Bye-bye.